That's why we focus on traded quantities, because traded quantities tell us who is a player who's on the winning side and therefore will keep his position, and who is a player who's on the losing side and therefore he's in distress, or what we call upside down in our markets, and therefore he will close his position, fueling a further move into the market. Right now, I just want to elaborate over here a certain fundamental point. The order flow chart is not just based on pure buying and pure selling. Price does not move just because 100 people came and bought. Price also moves because there is short covering. Right? Price moves up when there is short covering. Price also moves when there is long liquidation. That means, longs are booking profits in the market. Price can come down. What we look for in the market as derivatives traders is a market which is shifting all the time. We are not married to one view of the market, which is that the market will go up all the time. We are open to the possibility of the market going sideways. We are open to the possibility of the market going up. We are open to the possibility of the market going down. And once we are alive and open to these kind of possibilities, what we do is we identify little points in the charts of what we know. It's not in me to understand everything which the market is wanting to do. It's not in me at all. I would not understand 100% of all that the market is doing. Nobody can understand the market 100% fully. But what I do is I work with certain setups. I have a setup which is called the failed auction, which you all know about. And if the market confirms that setup, I work a trade alongside it. I also work on a setup which is called an IB3 candle, which is my 30-minute initiative buying candle, which was here, right? So the last IB3 candle came in about 2 days back, around here. So I have a certain process which I work with it. I do not understand the market fully, and I don't want to understand the market fully. But what I know is that once I have this kind of a setup in place, like this is what I call a special bar out of all the bars which are there. And I make a rule around this. And I say that the market is positive above this IB3 bar, right? In my way of looking at it, in my way of process, or in my way of looking at it, I would see that this market is positive about 23,070 and negative below it, and I will activate this trade of about 23,180, provided I get some greens or demand. What is this bar?
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. Welcome to this Monday 5 p.m. session where we'll start with the weekly review. The first week of August is done. We met last Monday where we discussed the profile structure on the monthly time frame of August and how in July we started with a balance, and then we started trending lower in the second half. So what have we done in the first week of August? So let us start with the weekly report, which we have on the forum section on the website. We update all these reports on the website, and they carry very important information based on market profile. Because this is the higher time frame spot references, we use the market profile tool, and then as we go deeper into the futures, we also get the order flow references into it. So let's start with the weekly spot chart of last week, and we'll start with the review of what we did in Nifty in the previous week. So we have spoken about how on the weekly time frame we have been continuously making neutral extreme profiles to the downside. So even this weekly profile, which I have marked of the week prior to last week, was a neutral extreme one where we had left a failed auction at the top. 24956 was this failed auction, and we had closed around the lows, and we left this extension handle here at 24598, which was our reference for the week starting from 4th of August. So what did we do on 4th of August? On 4th of August, we opened lower, but we took support in the B period, left a small tail, and we negated this extension handle. So this 24598 was no longer a valid sell side reference, and we got into previous week's value. So getting into previous week value, we tagged this weekly POC of 24680, which was the first reference and the objective. But what we did on the upside, you can see we started to stall. This kind of behavior we have been seeing for the past 5 weeks, because if you go back to the end of June and the start of July, on the weekly time frame, what we have been doing is we have been stalling at previous week's POC and leaving similar highs at that zone. What does that tell us? That is telling us exhaustion to the upside, and that is the reason why after the probe attempt to move higher on Monday, we end up closing lower for the rest of the week. And that is the reason we have been forming this neutral extreme profiles on the downside, because the highs of Monday try to get into an important weekly reference, they fail, and from the next day onward, the seller take advantage. So you can see how we failed at this point, and immediately the next day, Tuesday, we got this initiative selling tail. So when you're getting an initiative selling tail, it is telling you the big player is getting into the market. And this initiative selling tail came exactly at this weekly VPOC of 24680. And although this was an inside bar and we stayed inside Monday's range, what we did was we left a selling tail at this 24680. And you can see on Wednesday, that was exactly the high. So this supply side reference was holding. And we have also discussed in these sessions how the weekly POC is the sacrosanct level when we are doing the analysis. So if we were below this 24680, there was no need, no reason to be bullish. We had to be bearish. We had to look for downside moves. And that is what happened on Thursday. We stayed below these lows. In the first half, we probed lower, made these new lows, and stalled right at an important support of 24333. From there, we saw some profit booking and short covering, which gave us this neutral extreme profile to the upside. This neutral extreme profile left an extension handle here, and then it closed in a spike. So we always in market profile, we always use the term spike rules. So neutral extreme profile is also kind of a spike because it gives you a move in the last 45 minutes, which moves away from the profile which it is forming the entire day. So I'll just make that spike little more clearer. So this was the spike zone of the neutral extreme and was the reference for Friday. But what did we do on Friday? We did not get any follow up. That means we did not get above the neutral extreme high, but in the A period itself, we broke this extension handle. So that means the buyer who had caused the neutral extreme was no longer there, and now the seller was taking control, and they swiped through this value, and we went on to leave another extension handle at the close on Friday and closed at lows. So we made lows of 24344 on Friday. Sorry, we made new lows of 24337 on Friday, broke this lows, but it was still a spike close. So what was the spike? Just like how the spike was this extension handle to the highs, today the reference was this extension handle which we left late in the day, which was a 24382 to the lows of 24337. So that was the zone we were looking at for at open in the morning today. So this is what we did on the daily time frame. Let us just have a quick look at how the weekly profile shaped up. So the weekly profile for the fifth one in a row was a neutral extreme to the downside with yet another failed auction at the top, which was at 24736. And before that, last week we had mentioned that we had left a failed auction at 24956 and the 180R objective of that was 24415. So that was tagged. So that objective was hit, and before that we also broke below this extension handle and made a low of 24337. So what we did on the weekly time frame was an overlapping to lower value, but still it was a neutral extreme profile. You can see how value was overlapping to lower compared to previous week. So what was the takeaway this week? The first takeaway was this failed auction on the weekly time frame. The second takeaway was this 24554, which was the weekly IBL of last week. And why is it important? Because we had formed a failed auction and this was the weekly IBL for us. And then the immediate reference on the upside was this 24432, which was this 2-day HVN and the POC of Thursday and Friday. So this was our uh, reference for today. And if we have a look at the hypos for today, which we always mark. So you can see how the first hypo on the upside was 24382, which was the extension handle. Whereas on the downside, we were bearish only below this 24333. We had to, just like on Friday, we needed to get above the neutral extreme highs. Today, if we had to be bearish, we had to get below the lows of Friday, which did not happen. So we will have a look. I'll just open up the chart of today's spot and we'll see what we have done on the daily time frame. And you can see these hypos are not just random levels. We stopped at each of this hypo today while we were progressing and left important references. And today's high, not by coincidence, is exactly where our last hypo for today was. So this report was published yesterday. So we were ready with these references yesterday itself. And if the market moved in this direction, this was the last objective which we were looking out for. And if you see the highs of today in spot to the dot, it is right 24600.85, I think. So that is the reason we look at market profile for structure and important references, and it never fails to amaze us. It is always giving us precise levels as far as the understanding of the structure. So I'll come to the chart of today in a bit. Before that, let us just have a quick review of the Bank Nifty weekly profile. So Bank Nifty also we had discussed last week about how we had the rollover point and we had a weekly VPOC right at that rollover point, and how we had got one reference of 55355, which I had explained was the yearly POC of 2025 and is an important reference getting into the month of August on the downside. So what did we do in Bank Nifty on Monday was formed a normal day. It was a very narrow range profile which left a small selling tail at the top and a buying tail at the bottom. So we remained in a narrow range all day. But what did we do on the weekly time frame? We formed lower value and we were below this weekly value area low and well below the POC and the rollover point. So the PLR remained to the downside, but yes, this tail had to go. So what did we do on Tuesday? We formed an initiative selling tail. So this selling tail came right at the value area high of Monday. So it was telling us that the Bank Nifty is now ready to move lower. And that is what it did. It went on to move lower, we left this selling tail, which was the reference. And you can see how once we left this selling tail was not able to be taken out. This high of Wednesday was right there. We did make a spike close on Thursday, forming that neutral extreme profile. But spike is something which has to get accepted the next day at the open. And what did we get next day at the open? We got another initiative selling tail. So you can see how this first tail of the week on the daily time frame held throughout. So that was telling us that the PLR remained to the downside. And what we did on Tuesday was we broke below that important reference of 55355. So once we broke below that, we did get a bounce back. We tried to close above it. You can see how the close was above this. And the second day also we formed a neutral center profile. So the buyers were very keen to defend this yearly POC, which is but expected. So because on the yearly time frame, Bank Nifty is still a nice elongated buy side profile. So the POC of that would be defended by the buyers. Else we can continue to drop lower. So once we saw this buyers coming back, but the step was they had to take off this selling tail, which they failed to do. And you can see how the neutral extreme did make a lookup above the highs. This high was taken out, but we got a initiative selling tail on Friday. And this initiative selling tail resulted in an outside bar, in fact, a double outside bar. So this told us that the sellers have taken control and the buyers have failed to do their job well. So that is what it was in Bank Nifty on Friday. Same thing as we discussed in Nifty, we left an extension handle in Bank Nifty also. And this was that extension handle in the LTPO, and we closed around the lows. So in fact, we made new lows for the week into the close. And the weekly value, if you see, although it needed to be a trend down one, it was not actually a trend down one. Why? Because we got that bounce back with a neutral extreme profile on Thursday. So it looks a nice balanced profile, although it's a normal variation one to the downside with completely lower value. You can see we have formed completely lower value on the weekly time frame. So one important development which happened while this was happening was the POC on the weekly time frame shifted to the bottom of the value, which is at 55131. So this became our important reference for the current week starting from today. So when we do the analysis of what has happened today in spot, I will show you how exactly at these references which we mark out, the buyer was giving us fresh cues to tell us now the sell side is being taken over by the buy side. So we always keep talking about change of polarity. Prior resistance becomes support and vice versa. So that keeps happening when you are watching the market profile develop TPO by TPO. And today's auction, both in Nifty and Bank Nifty, was such where it was leaving important footprints, telling us how the buyer was climbing slowly and leaving fresh footprints TPO by TPO. So coming to the hypos for today in Bank Nifty, you can see the first hypo on the upside was this MTPO high. And then we had the POC of Friday. In fact, POC of Thursday and Friday was overlapping, just like how it was in Nifty. Nifty it was at 2442432. In Bank Nifty it was around this 55134 level. So we had these references marked up, and you can see just like what we did in Nifty, we covered all these hypos and we just stopped short of this 55585 is the high which we made today. And on the downside, we did break below this at the open, but we were not able to make new lows. We were not able to break the lows of Friday. So what was that telling us? That the spike we got on Friday was more a emotional one rather than a initiative one, which is the reason that spike did not give us any follow through. So let us now get to the action mode of what has happened today. Let's start with the Nifty weekly chart, and then we will have a look at the Nifty daily, and then we will move on to the futures. So here you can see what we have done in Nifty spot is on the weekly time frame is we opened well below the weekly value. The open was a bearish one. In fact, the entire A period was below the weekly value and below this HVN also of 24432. This TPO HVN which you see is 24432, which is where our initial balance high in spot was. So as I was mentioning, market profile will always give you references, important references of previous session and give you fresh cues at that level. So what we did was, but we were not able to break below this. Even though we had similar lows here, we were not able to repair this. So that also gives more credence to the fact that not all poor highs or poor lows have to be repaired. Sometimes it just shows you exhaustion in that direction. Just like what we saw on the last week daily chart of Monday, we made similar highs of 24736 and 734. So that was also exhaustion. This is right here. I can show that to you here. This was exhaustion on the upside. This is exhaustion to the downside. So when at the open in the initial balance, the B was inside A. It was an open auction in range chart. So there was no clear bias. There was no clear signal that the seller who was controlling the close of Friday is still in control. Yes, he did keep it below this POC. But once we took that POC out in the C side, it was always a matter of how much it can go up. And what did we do? We did make a dip in the F, but the dip held this A and B TPO halfback, which was the support. And then we went on to get back into this weekly value. And if we get back into the weekly value, our target becomes this POC 24622, which is the weekly POC. But we just stalled below this. And we have just filled up this profile from last week, the low volume zone profile of last week today. So it in fact, it has been a trend day up in Nifty. I'll just switch to the daily chart on spot so that we can clearly see how it has taken out some important references and where it has left the footprints for tomorrow. So if I shift to the daily spot chart where we already have these hypos marked up, and I'll just split today's profile. So you can see how we did make a probe below this bearish hypo of the day in the A period. But what have we done? We have left a small buying tail. So this is a rejection below this. That is the reason we were no longer bearish, because the probe below the first hypo on the downside for the day was leaving a initiative buying tail, A period tail. And what did we do? Once we got above this, we stayed above this in the initial balance, and then we got back into this Friday's value, did the 80% rule here. This dip in the F period held the value of Friday. So when you're not moving lower than previous value, that is what we see in market profile. We trade value, we don't trade price. So when value is not getting, when the auction is not getting accepted below previous day's value, you know it is not a bearish sign. And what did we do? We did make a high in the E, but once we took that out in the H, we continued this probe. We took out this selling tail of Thursday, and we went on to negate the entire selling tail. And the spike, it is not exactly a spike, but the highs which we made in the L, you can see where is it tagged? It is tagged right at this reference, the selling tail from the neutral extreme profile 24601. And that is the high we have made today. And we made a small retracement into the close. But nonetheless, what we have done today is formed a trend up profile. So what would be the important references for tomorrow? This halfback of MTPO would be our first support, which is coinciding with that 24544 reference, which was our swing point for this week, the weekly IBL from previous week. So if we are above the 554 tomorrow will continue to be bearish. Yes, we will have to take off this 24601 for higher levels, but on the downside, our immediate reference would be this. Below this, we will have this JTPO halfback. So I'll just quickly see where the halfbacks are, and we can so easily relate it with what reference we had yesterday. So 24519 is the JTPO halfback. Then we have the day's halfback at 24474. So this will be the lower support because it's a trend day. This 24474 would be an important support for this week. We have a holiday shortened week because of the Independence Day on Friday, and generally Independence Day, the time during the Independence Day, sentiment wise, we are slightly bullish. So it is not a surprise that we have got a trend day up, and we can expect the dips which we get in this week to get bought. So what are the support will be important, but if we break this support and stay below this, then we will no longer be blindly biased on the upside. And on the downside, we have this FTPO halfback of 24426, which will be the lower reference. And finally, we have this BTPO halfback of 24385. So these will be our references on the downside for tomorrow. As long as we are holding this, most importantly, this 24474, we will look for more upside in the week forward. And what will be the upside references? We have them covered. The first would be this selling tail from 6th of August, 24649. Then we have this value 3-day value area high at 24694. Then we go to this 24734, and finally this failed auction on the daily time frame, which the month of August started with a failed auction 24784. And I would want to recall, when we covered the monthly report, we discussed how 24791, which was the yearly POC of 2025, will remain one big reference for the rest of the year. So when on August, the first day of August, you are leaving a failed auction, you very well know that you need to go get into short positions. What will be your stop loss? Your stop loss would have been the 24791 reference. So from there, you can see how that 24791, the yearly market profile reference, helped us to see this drop from 24791 to 24337. So let's now move on to the Bank Nifty profile, and then we'll come to the daily report. So let's open up the Bank Nifty weekly chart and see what we have done today with respect to previous week's value. So we have a very good and famous setup in market profile called the 80% rule, and we make use of that a lot of times in the VTrender live desk. So what is the 80% rule? I had already spoken when we covered the weekly report that how, in spite of it looking like a trend down range wise, weekly profile was a Gaussian curve. It was a nice balance. Why? Because we had a big bounce back around the highs with a neutral extreme profile on Thursday. So which is why the structure of weekly profile was a balance. And we also pointed out how the POC shifted to the lower part of the value. So what did we do today? We did not get any follow through. We did not break this lows. The spike low was not broken, and we left an initiative buying tail. Once we get back into this value, you can see how we remained in this value and we completed the 80% rule. What is the 80% rule? In a well balanced value area zone, if the auction enters from the top or the bottom, there is a 80% chance that it will go through the entire value area again, because a balanced value area tells us that buyers and sellers were in agreement in that zone. So whenever it will enter again, it will do a good move again. So what we did was, you can see how the BTPO halfback was right at this POC, and the drop down in F was right where the POC of the weekly was. So this is how the market profile gives us important cues that we got an initiative buying tail, and then the dip after the seaside we do not trust. So after this, he said we were looking for a dip, and the dip got us back to this POC. And as we mentioned on the weekly time frame, below the weekly POC we are bearish, above the weekly POC we are bullish. So when we are leaving a pullback high at the weekly POC, we know that the auction wants to move higher, and you can see how we have formed a one time frame move higher in Bank Nifty for the rest of the day. So we have got above this value area high, and we have closed right at that value area high point in Bank Nifty spot. So what would be the references for tomorrow? So just like I said, and what we have done today was, first we left this pullback low at the POC, and the second part we had spoken about how 25355 is the yearly POC and an important reference. See how the IP rate first stalled there, and then we have left an extension handle right there. So what the lows of the K period and this halfback of J is right at that zone. So this is how the market profile gives us continuation signals. When you are leaving higher footprints on the buy side, you know that the auction wants to go higher. So if I switch to the daily chart of Bank Nifty spot, so that we can just have a quick look of what our references for tomorrow would be in spot. You can see how overall we are in a 3-day range. The range which started with this neutral extreme profile on Thursday. We made an outside bar, we probed above, we got rejected, then we probed below, but we did not get a follow through today. So the auction did not have any other choice but to get back into this range and again test the top end of this range. So on the 3-day, we are forming a composite, but we have formed completely different profiles. Neutral extreme to start with, a normal variation with a spike to in the second day, and today it was a very neat clean trend day. Why? Because we left an initiative buying tail, then we continued to probe higher. We made this extension in the C, which we do not trust, so we got a rightful pullback which took support right at this 2-day POC, and then we went on to trend higher into the close. So yes, we have stalled right at this tail of 55614, which will have to be taken out for more upside. But on the downside, what will be the support? The first support would be this halfback. 55500 is also the weekly value area high of last week. So just like how we did the 80% rule to the upside in the weekly value today, there is a chance that if we get accepted below 5500 tomorrow at the open, there is a good chance that we can do the reverse 80% rule. So we will have to look out how the initial balance develops, and if we have a selling tail in the A period tomorrow, so then we will be able to identify that the auction is doing the 80% rule to the downside. Below this, as I was mentioning, this low of K, which is right at that 55355 level, would be our reference. This is the yearly POC, and the yearly POC will be one important reference. It was an important reference for us today on the upside, but now because we have closed above it, it will be a support on the downside. Then we have the halfback of today, which is around the 55250 mark, and then definitely this pullback low, which has come at the weekly POC. So the halfback and the pullback low, which is coinciding with this weekly POC, would be the most important support for this week in Bank Nifty spot. So now quickly, let's on the upside, what have we got? We will have to take off this selling tail of the 2-day composite, and then we are looking for this 55752, the selling tail from 4th of August. Then we have this halfback from 1st of August, which was a neutral extreme profile. So that is an important reference that comes to 5582830. A very interesting point to note is 55825 is also the POC of the developing month, because we started forming a prominent POC there, and from there we moved lower. So that will be one important reference. And then we have this 55924 and 56077 as the upside references. And yes, above that we have our rollover point for the August series, which it does 56170. So make sure that you are aware about the monthly references at all points of time. And as long as we are below this rollover point for the month of August, you cannot be ultra bullish. This is where our rollover point is 56170. And we had left a very important cue here because this was also a weekly POC before we moved away from there. So let's now move on to the futures report as well as today's chart and see what was the opportunities we got using the tools which we have at our hand in the VTrender charts. So this is the daily report wherein we mark out what the open type, the initial balance and the day type was of the previous day. And just like what we saw in spot, we have an extension handle and we close down in a spike. So we have a small brief which is given, and then we have the daily zones, weekly zones and monthly zones. And then in the weekly zone, we make sure that we cover the last week. I had discussed last week how it is very important to follow the weekly series in the futures. Why? Because the weekly series gives very important cues, and we had to know what the references we could carry forward for the next week was. So that is the reason we follow this weekly series. Just like when the settlement gets over, we have the references marked up so that we are aware about what levels we need to be taken out to be bullish or bearish. So then we have the business areas for today. Today's business area 24463 was that extension handle which caused the spike lower on Friday. And then we had Friday's VWAP as a reference. And then we have the main extension handle which came in the BTPO on Friday as our higher reference. And then we have this 24612 and 24668, the ATPO VWAP of Friday and the weekly VWAP of last week. On the downside, we had 24440, which was the HVN. You can see this HVN on the daily chart also. This brown tan line is telling you that there was good volumes which had accumulated here. So that HVN was our immediate support, and below that we had a swing low of 24409. So you can see how at the open today, if I open up the chart, how at the open today, I'll split this chart. And we can see how we did not get any follow through to this lows. This low was broken, but we did not break this swing low of 24409. So we did test the 24409, but this was an identical low which we made today. And then we left this important buy side tail. And once we settled above this HVN in the initial balance, we were looking for more upside. We got that with a C side, which tested this anchored VWAP and stalled. We in fact made marginal higher highs in D and E, but you can see where the E period stalled. This VWAP, the neutral extreme VWAP, which has shown change of polarity on Friday because we broke that in the initial balance, was holding. But once that was taken out with an extension handle, we went on to make these new highs, test this 24612 reference from Friday. But what did we see into the close is this POC shifting to the top. So this is telling us that the buyers who had caused this profile, trend up profile today, were booking profits. So what would be our reference for tomorrow? This POC will be our opening reference. We would be bullish above this POC. Below this POC, we will look for buyers to come back, RBs plus IBs to form in the order flow. So the lower reference would be this halfback, the extension handle here, and then this VWAP of today, which is at 24554, would be the reference. So I'll just quickly change this to the 2 window mode and we'll have the order flow on the right, after which we will move on to the NTM Volume X chart so that we can decipher how a combination of the Volume X along with the order flow gives you some good trading opportunities. So I'll start with the 15-minute order flow chart in Nifty futures, and we'll move on to the first 15 minutes of the day to identify what was the open type today. Before we can so this is the open, today's open. What we did in today's open was we took support just above that swing low and we formed a green bar to the upside. So the volumes were below average. 8,000 contracts is the average volumes in Nifty futures for the first 15 minutes. So the volumes were below average, but the move above the extension handle of 24465, we were expecting a test of this VWAP, which was at 24519. So it was looking good, just like how I showed you the hypos for the spot. We have business areas mentioned for the futures. So once we take out a business area with a green bar, we are expecting the next business area to get tagged. But what happened was we did get above the 24465 level, but we stalled just below the 24519. So we made similar highs and we got this RS bar, which gave us a dip lower. But the dip lower held this RB and the HVN of 24440. So you can see we did break below 24440 in the next half an hour, but we were not getting any sell side volumes. We were getting very less volumes on the sell side. That means the seller was not pushing in today. And because of which, once we got back above the VWAP and took off this RS in the C period, we were looking for that move to 24519, which we promptly tagged. So about 24519, we had the higher references, which was the selling tail at 24580. So that is what we did. You can see this dip. Once you probe higher, you leave some important cues. So we had this 24480 as our support, which was marked. And you can see this dip took support right there at VWAP. But then we did break below VWAP very briefly. But that also held that 24480 level. This was the low to the dot. So when you're looking at this in order flow, you know that the buyers are doing a good job and they are holding the VWAP. So you can expect more range extension to the upside. So we went on to make this new high and then continued higher. So this is where it stalled, and you can see what we have done here. After this IB bar, which we got some good greens, we saw the POC shift to the top and we got some big greens here, 1766 green, 1528 green, and then here 1058 green. So overall the cot was green, but the close was not at the highs. So what could be the reason for this? The reason for this could be that these are shorts which have been forced to exit. How do we know? Because this is a prior supply zone. We had a selling tail here, initiative selling tail. So as and when the auction kept probing higher, it was triggering the stop loss of the shorts. And what we have seen at the close was it has mostly forced all shorts to exit. And that is the reason once, even after getting these greens, we did not close at the highs, but we made a dip into the day. So what would be the reference? Tomorrow would be a fresh battleground between the buyers and the sellers, because it looks as if today's auction has forced all the sellers to come out. So tomorrow this POC would be our first reference, and from here we will see how the order flow shapes up. If we get accepted above the POC and get IB3s, we will look for more upside. If not, we will look for a test of this VWAP, because today is a trend day. This VWAP will be a very important reference. So this is what has happened today in the futures as well as the spot. So now let me just, with this background of what we have done in Nifty futures today, let us come to the volume X chart and just see first what the volume X showed us from morning. So this is the bar bar in the volume X, and you can see how at the open you can see the call volumes were slightly higher, and then there was a period where the put interlinked, it even got above this, but then this point the call again got above it. So this was the B period, 9:51 to 10:15, that period. From here you can see how this call continued to diverge. It did make a dip here, but then after the dip they just converged and again it started to diverge. So you can see the points where it is diverging are the places where you are getting a fresh indication that the auction wants to continue higher. And what do you do in this case when you are seeing divergence happening or this cross of the call and put volumes happening? You just need to open up a call option chart. I'll in fact what I'll do is I'll just switch this into a 2 window mode, and let us start with the first instance where it got diverged. So on my right side I am putting up the 24,300 call option, and I'll put up the line chart of the call option so that both of them are easily readable. So what did we do? As I mentioned, we started with the call volume X going above the put volume X. But here we did made a probe higher, but then we got this IS which did not get triggered because we did not break this low. And then after this failed divergence of the put, the call again started to diverge here. So this point was around 950. And you can see here this 950, you've got this IB3 in the call. I will also open up the order flow chart in a full window mode after we do this analysis here. And you can see how this IB3 gave a fantastic entry into the trend. And this entry held. And we went on to make good highs. And the dip which we got later in the afternoon, no point of time broke this entry. And then again, whenever we got a fresh divergence, we got a fresh IB signal. You can see this IB plus IB coming in again around the 1 a.m. mark. So as and when we were continuing to get divergence in the volume X, you were continuously getting divergence signals in the, for example, this. When you are getting a fresh divergence in the CE volume X, that is when you need to open up the call chart and see if you are getting a IB3 in that. And if you are getting an IB3, that's a very good low risk setup which you can trade and then hold to some position of that with stop loss at cost. So this is how you need to make use of this. I'll just quickly open up a order flow of the option chart of 24,300 call, and we'll see what were the signals today and how many IBs or IS we got today. So today was a very clean day. It was a trend day to the upside. So it was a relatively easier one to trade. But even if it is not such a easy day, the conditions remain the same. We wait for a uh, we 24,300. So I'll just switch on to the 3-minute order flow chart of that 24,300 which we discussed, and I will ride it from the open, quick run from the open to the close, and we'll see what were the signals and what was the time of the signals which we got in that. So we'll also mark them out. So you can see how we opened with a probe above the VWAP. but we got this IS. This IS did not get triggered because this low did not break. Had this low broken, then this was a short side trade with a stop loss of 201. But what it did in fact was it negated this IS high, but then we got RS signal over here. And then we got that swipe in the put and call volume X and a reversal. So after this dip, when we got this IB3 at VWAP, this was the time 9:51, exactly the time where the call volume X got above the put volume X and started to diverge. So this IB3 along with that volume X signal was a perfect entry into this call. What was the stop loss? 195 was your entry, 181 was your stop loss. You book your targets as per the range, and then what you do, you put your stop loss to cost. Here, because the immediate bar after the IB, it made a low of 193. So this is what you can keep as your stop loss. And you can see how this low in the 1009 bar made the low right there with zeros on the sell side. So these are very important cues you will keep getting in the order flow. And that is why the order flow is such an important tool, because it will tell you how much of supply and demand is coming at important references. And this is not just for futures, but for options as well. So once we get that IB3 entry at that 194 level, you can see how that IB3 entry level is being defended. So that is how you could have remained in this trend, and this one trade, if you would have held into the close, you would have got a high of 325, which was also the 3IB target of the call. So that is what market profile gives you. It gives you the target, probable objectives, and if you are getting a trending move, how long you need to hold on to it. So you can see how we continue to remain above VWAP after getting zeros at this 194 entry level, and later on this dip again in the 11:15 period where we saw the dip in the spot also. You can see how you got 5 rows of zeros right at VWAP. So this is the kind of order flow signal you need to remain into long positions if you are in this call. And what was our entry point? It was 194. So when the VWAP is being defended and when you're getting this kind of an RB bar, just as it is almost kissing VWAP, you know that the buyers are in control. And even if that does not give you confidence to get into long side, wait for the IB trade. Yes, this did go on to break. So ideally that would have that level would have been broken, but still you can see how the reference of 194 was holding, and this break of VWAP, you could not get a single IS bar. In fact, after that first IS bar which never got triggered, you cannot see any IS3 in this call. And at the VWAP, what are you getting? You're getting RBs. You're not able to sustain below this VWAP reference. So what do? You wait for another signal. You want a signal at the VWAP of an IB. So you will wait for that IB signal to come, and also look at the volume X to give you the confirmation that it is a valid one. So where do you get this IB? You can see how right at the POC and just above the VWAP, you've got this IB signal at 1236. So this is your fresh entry into this call. The morning entry of 194 is still holding, but we had broken VWAP, we got RBs, but this IB is telling you now you can get fresh long into this. 228 is the entry, 217 is your stop loss. And what does this do? This not only gives you the target one, it again gives you another IB at 1251. So it is telling you that the trend is strong. Inside 10 bars, if you're getting IB plus IB, it is telling you that the trend is strong. And what you can do, you can trail your holding to the POC below the latest IB signal. Where is this? 231. If you go to the market profile chart and open up this 24,300 call option, 231 is where we have the VWAP of the previous day. And once you are getting a buy side reference there, you know that now this is support and this is headed higher. So on any dips with 230 as your stop loss, you could have taken a long side trade. But yes, IB3s, if you're getting fresh IB3s, you make use of it and enter the trade and book as per the range. And you can see how we did. We never broke below the 230 level. We got another IB which got triggered only later. Not we, in fact, we broke the lows. So it was not a very good IB signal. But still, as long as the 230 was holding, we were looking for more upside. And then we got this new highs in the K period. And this IB bar came in, which got activated. But you can see how this 325 is where the 3IB mark of this call was. And it is showing as an IS. So when you are hitting a 3IB objective, you don't get 3IB targets every day. It's very rare. So when you're getting this, you should make sure that you book profit at this level. So it is not at all a surprise that you see an RS bar here, which is followed by IS plus IS. These are the only IS bar you see in this call in the entire day after the IS we saw, which never got triggered with the low of 172. So what we have done into the close today is we have got a dip and we have got this IS plus IS. So this 318, 319 highs of IS would be the reference for tomorrow. So this call will have to get above this level for it to again be bullish. But what we are going to do for tomorrow is we'll have to shift the strike from 24,300 to 24,400. Why? Because the spectrum has shifted its lower range. We are at 24,400 on the downside. So that will be our lower range and that will be the call which we'll be tracking for tomorrow. And same thing, we will see what the volume X chart is showing us. And with that, we will confirm the order flow signals and look to take trades. Because these tools, when they are matching, they'll give you higher probability and that setup being a winner. So I've already extended a lot of time. So I would just want to wrap things up here. In case there are any queries, you can just feel free to post them or you can mail us at support@vtrender.com. You can also write DM me on Twitter. My ID is open. It is at Uttam Goel. We'll be happy to answer your queries or any suggestions for the sessions we have at 5 p.m. on Mondays and Thursdays. So thank you guys for joining in and I'll sign off for the evening. Have a great evening and let's look forward to a good trading session ahead before the Independence Day. Thank you guys and have a great evening.